I think it's going to happen at a shocking speed. So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. Yeah. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets.
From the stock markets to bonds and cryptocurrencies, the financial markets are feeling the full blow of a rapidly collapsing global economy worsened by a brutal war. When the Russia-Ukraine war started back in February, many investors were certain that it would end almost immediately after it started. However, it's been 4 months and the war is still raging and has locked up tons of raw materials and food meant to be exported to other countries. No one knows when the war will end and how devastating it is going to be for both countries and the rest of the world. However, it is certain that, in addition to other grave consequences, the war has terribly worsened the ailing global economy. For the past few months, we've watched some of the largest economies struggle with record-high prices, weakening fiat currencies and general economic collapse. In a recent broadcast, macro guru and Real Vision CEO Raoul Pal and renowned author Robert Kiyosaki vividly described the extent of the damage. Pal opines that the next few months are going to be quite ugly, especially as the Federal Reserve continues to struggle to bring inflation under control without crippling the economy. We will now take you to Raoul Pal's interview. But before we do, please take a little time to like this video, subscribe to the channel, and drop your comments, thoughts, and observations in the comment section below. Thanks and enjoy the video.
The IMF says the world economy faces the strongest headwinds or challenges since World War II. And so Raoul Pal is talking, he's a macro global economist. He walks the talk. He knows what it is. He's made Kim and I very rich on his recommendations of when to buy Bitcoin, and I'm very proud of that. But one thing that he mentioned is talking about talked about debasement of currency. So here's a penny, it's copper. And in 1964, I was looking at the quarters and dimes, same color. Do you know what I mean? It's the same color. So basically, in 1964, dimes, quarters, and half dollars became copper. And that's what you were talking about, debasement. And I think we're paying the price for it, because I'm really glad you started with history, because macroeconomics is history. You have to look back in time. And every time people did this, first was the Chinese, they printed paper money, and the Chinese empire collapsed. And then when the Romans did the same thing, debased the currency, the Roman Empire collapsed. So when the IMF made that announcement, I was going, oh my God, thank God Raoul's coming on. Because are we looking at the end of the American Empire?
Can you go into what you're seeing coming down the road?
I think it's going to happen at a shocking speed. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot, they stop raising rates. They already started suggesting maybe we'll pause in September. My guess is June will be the last hike. And after that, they will say, well, we're just going to see, and we'll see the economy start going down the toilet. And they will start thinking, well, we're not going to do QT now either. So they're not going to start shrinking the Fed balance sheet. And before you know it, we're going to be talking about rate cuts, but we don't have many rates to cut, rates are nowhere. So the only outcome is they're going to have to print money. The credit markets are already starting to dry up. That's usually an indicator. The housing market's rolling over. That's a bad indicator.
Printing money is this stuff here. You have a silver coin. You have a copper coin made silver, right?
That's right.
Basically, and it's called debasing the currency, which the Romans and Chinese already did.
Yeah, because don't forget, the debasement of currency works in a simple way. If you're really thirsty and I have a bottle of water, you'll pay anything for it. If you're really thirsty and I've got 5 bottles of water, you're kind of thinking, yeah, I probably need some of that water. I'll buy them all, but at a lower price. If I say, here's 1 million bottles of water, you don't want any of it because there's too much water now. It has no scarcity. So if you make too much of something, it becomes less valuable. So if Da Vinci had created 50 million pieces of art, guess what? They're worthless. And so it's that concept. And what it does is if something gets devalued versus something else, so we're not making more shares in the S&P. Actually, what we're doing is buying them back, making less of them. Therefore, the S&P goes up. Real estate. Yes, there's periods where we try and create new real estate, but generally real estate prices go up versus the Fed balance sheet because it's a relatively scarce asset. Same with gold, same with crypto. So that's the phenomena.
The question is, when does a bull start climbing again, right? Is it kind
That's
of what
right. And we either go through a scenario like 2000, which was a typical old school recession where, equity markets, unwound excesses, the bear market was 18 months or so, and then the Fed keep cutting rates and eventually it stabilizes. But if we look at 2008, which was the next recession, as soon as the Fed used the Fed balance sheet, we pretty much stopped in its tracks. Happened really quite quick after they did that. They cut rates first, didn't really help because the banks had seized up. Then they used the balance sheet. Then they did it again in 2010, 12, 16, and then 18 was the Fed pivot, the Powell pivot, where they went from hiking to, oh my God, we need to cut.
After the 75 basis point interest rate hike in June, Jerome Powell, the chair of the Federal Reserve, stated that a similar hike might be in store for July. However, the third quarter and second half of the year could bring in unexpected surprises that would necessitate a different direction for the apex bank. If the economy declines further and the threat of recession increases, then we could be seeing another Powell pivot. What is your prediction? More hikes or cuts? Please let us know what you think in the comment section below. Let's get back to Raoul Pal's interview.
Is what choice do you give people? Do you say, well, you're going to get destroyed because of the supply chain issues, because of COVID and all of this, and your wages won't keep up, so we're going to destroy household net worth, and everything's levered. So all the borrowings against houses and all the borrowings against equities and all of the borrowings on top of borrowings, and you're going to let the collateral go down and blow the entire thing up?
But isn't that what they're doing when they say they're going to pay off the student loan debt? Because if there's debt, there's also
that's debt forgiveness. That's MMT, right? Which is coming, whether we like it or not. Again,
okay, I understand that.
So what you're trying to do here, what they're trying to do is reduce the debt via financial repression, which is you basically have inflation running slightly higher. So you have than interest rates. So what you want is to reduce the real value of the debt. So if you think back to your parents, how much they paid for a house and the mortgage they had, the mortgage seems laughable. It's because over time, inflation raised the value of the house and the debt doesn't get raised. So in the end, the debt is nothing. So
the way that is this stuff here make the money less valuable.
Correct.
Oh.
It makes the debt less valuable.
Right.
So it's okay if you're in debt, but if you're borrowing, if you're lending money, it becomes complicated. But anyway, the point being is you either have a fiscal stimulus, which is, let's say, the Republican view. We'll have a fiscal stimulus, cut taxes, and we'll put some spending. And what happens is that doesn't go to the people who are the worst off. Right. So it's creating this issue of 1% versus 99, which everybody can see and nobody knows how to solve. The issue is actually the balance sheet, because all of the expensive assets keep going up because they keep printing money.
The rich get richer.
The rich get richer. Yeah. But doing this blanket fiscal stimulus is hard because the rich get richer again. So I think people have thought, well, maybe we should just try and give it directly to the people who are most affected. Okay, fine. Those are the two choices, or you do nothing, which is too late because there's too much debt. So you can't let the system clear anymore. The old way would have been you let the system clear, it's all okay, you just have a recession, everyone stops borrowing as much money, blah, 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 blah. The world is 400% of GDP in debt. The world has never been this in debt in all economic history.
Raoul, I hate to say this, I'm seeing your point of view.
Yeah, and what I'm saying is, regardless of your philosophy, it's difficult to find other outcomes that kind of make some sense.
Let's take a quick look at the cryptocurrency market before the video ends. But before we do, ensure you drop your comments about Raoul Pal's interview in the comment section below. Over the past few days, Bitcoin, the world's leading cryptocurrency, has traded in the $21,000 range. As of press time, the crypto asset has gained around 6% in the past week and is now exchanging hands at $21,294 with a market cap of $406 billion and a 24-hour trading volume of $3.97 billion. Popular meme coin Dogecoin has also had a favorable week. As of press time, the crypto asset is back among the top 10 largest cryptocurrencies with a market cap of $9.6 billion. The meme coin has gained over 23% in the past week. Other top cryptocurrencies have also recorded similar gains in the past week, from Solana's 24% gain to Cardano's 7.15% gain and Ethereum's 12.64% gain. The slight recovery has taken the overall cryptocurrency market closer to the $1 trillion mark at $957 billion. However, we are still far from what the market looked like during November's peak. What do you think about the recent trend in the cryptocurrency market? Is it going to be another short reprieve before more pain? Or are we getting closer to the beginning of another bull market? Please drop your comment below, hit the like button, and subscribe to the channel. Everything helps with the YouTube algorithm so we can continue bringing you these videos. Thanks for watching.